So we're going to start working a little bit now on how to actually get the risk in. So we want to make sure we know the difference between ticks and points. So a tick is an increment of movement. So every time we move up and down one movement of interval, that is a tick. Like SPY or Qs, every time you're moving up a cent value, you're moving up a tick. Now, futures do not carry a spread, right? So we just go tick per tick, and the ticks are almost always at even numbers, except on like crude, right? But most of our ticks are actually going to be on quartered increments that go up and down like this. Every time we move an increment from 0 to 0, that's a point. So this is 5,237 points, right? So, but we don't call that a point, we call it spot. So we'd call this 5,235 spot a quarter, right? Or spot 25. 5237 spot 50. 5238, right? So we always use the word spot when you're on the market. So these are all the, but we're always moving up quartered increments here, right? So 1 point is one full movement from 0 to 0. Everything in between is a tick. So let's start working on how to actually manage risk on some of these things, and then we'll do a little QA. So you can see here, I'm going to start with MES. Now, with TradingView, you have this nice thing where you can actually click on market, and it'll actually put your market order out. So the thing I like to do is start with one contract, right? You can see here that your tick value on MES is $1.25. And I've got 8-to-1 leverage here. The trade value, again, 34 grand, right? It's a lot of money, but you get a good ratio. So I take the stop loss and I'll drag, let me make sure it's a short. I'm going to drag because I want to go short because we're under the 20. My stop loss is above high of day like this, and I can take my profit target and drag it down here. So you can see right here, let's say I got this full short from R3, and I went from R3 all the way back to S3. I could risk $32 here, right? And I could make $208 if it works. Right? So now depending on the amount of money, let's say you have a $100 risk, well, now you can go here and actually change your contract value. Right? Let's say 5. Right? Oh, I can risk 162. That's too much. Let's go 4. 125. That's too much. Let's go 3. Okay, 3 is under 100. I can do 100. Let's go ahead and take that. It's in market order already. So you can just go ahead and hit sell, right? And it throws the order and you're in. So you can see here, it's 25 ticks, right? Which would be a 10, a point, basically like a 0.1% loss, right, on this position. And my target is down here, right, which is 168 ticks, and it's a pretty good return here, right? So, and then we're going to move towards the downside. Now, let's do, we'll do MNQ, kind of the same thing. We're under the 20 here. We're at R3 on a lower narrow range. So if I'm going to play, I'd want to go short. I'm going to hit market order to the sell. Stop loss goes above high of day. I'm under the 20, so I can see $56 trade. I can probably take 2 contracts. It'll be a little over 100. Take profit, again, is going to be my S3. Drag to S3. That's a 6-to-1 ratio, so that's certainly good enough. And sell. Boom, I'm in. Right? It does not take long to figure out your risk and how to get in and get out of these things. Right? It really doesn't. Right? So, and I'm just showing you how quick, you could see how easy it was for me to just put in the number of contracts, right? Select what I want to do with the price. And it tells me when I'm getting into it, it tells me what my margin's going to be. Like right now, to carry 2 contracts of MNQ, my margin right now is $12,000. right? But if I have, this is my paper account. By the way, the sign that you're working with a good mentor is your paper account has over $30,000 in it, right? If I was a crappy trader doing all kinds of weird things, my paper account would be all kinds of negative. I'm just saying. No, I'm kidding. At least I'm good at risk management. So you can see here, right? So this allows you to really get this all put together, right? So you can see it. Now you know what your entire structure is, what your trade is, what your stop is, and it's very easy to manage, right? Oh, of course. All you got to do is hit the X, and you can close the whole position, right? Or you can move your profit target up. You can say, hey, I just want to do the CP. But it makes it very easy. You can just visually see what you're working with, how many units you need. That's why I like using TradingView so much, because TradingView really shows you right on your chart how much you're risking, what that amounts at. Like this is one of those ones, like if $100 was too much for you, right, then you would have said, okay, I'm only going to run one contract. This is only going to cost me like $60 if I get stopped out, and I'm still going to swing for S3. So this is why I'm saying your max risk should be fixed, not your profit, right? With your profit, make whatever the hell you can make, right? But on your max risk, don't worry about it. You know what I mean? Like that's where it needs to be. This is not fungible. Like you have a certain amount you can risk per day, per trade, and you need to stop out. 1 trade, 2 trades a day, 4 at most, but I highly recommend just like 2, right? And then going for whatever the maximum amount you can get out of that position is. Right. So, but your risk is fixed, but maybe you take 1 contract. So you're only going to make 300 here. Fine. Just make 300. So if you wanted to get out of this position, you literally just go up here and click it. Click, doink, you're out. So again, one more time on the process, sell, market. We're going to stop loss above high of day. Oh, better price on this entry. Profit target down to the CP. Now, if it was a limit order, you could do limit, and it would just put a limit on. But if it's a market and you're happy with that, again, you can just send it. Pow! Market's on.
Hello, Market Alchemists. We hope you enjoyed this series. Please make sure to comment, and of course, like and subscribe.